Let's first take a look at how the Asian markets have opened. The Asian market, they have opened largely lower this morning. The Hang Seng is down over 1%, while the Taiwan index is currently flat at the moment. But what the market that is outperforming is Japan. Both the indices are up over 1%, and that after the October inflation data, which came in at 3.3%, and that data was above the Bank of Japan's target of 2% for the 19th straight month. So it's a bit of a mixed cues from the Asian markets. Remember, Wall Street was shut last night, so there are no cues there. They'll resume for trading today, but that will only be for a half a day. So those are some global market cues, but how will these cues impact the Indian setup? This morning, we have our team of researchers from CNBC TV18 joining in to tell us about the trade setup and the stocks to watch for this morning. First up, we have Rima, who's going to tell us the cues that she's watching out for today. Good morning, Rima. There is absolutely no momentum in the market whatsoever.
Absolutely. Directionally, markets have been moving up, step by step, but it's just been lacking momentum. So week to date, we have again, the Nifty on a week to date basis is up 0.3%. The mid-cap index is a gain of close to about 0.5%. So we have been inching up, but it's just been, those hardly few, point move that we've seen on the Nifty and the Sensex. And yesterday, in fact, we closed absolutely flat. You said that I'm going to tell you about the cues. The cues are that there are, not too many cues to work with this morning, with the fact that, U.S. markets were shut yesterday. Today, it's half a day. Asian markets, it's Japan, which, everyone's watching out for after that inflation data. And plus, yesterday, the Japanese markets were shut. In terms of flows, the DII's net bought 457 crore in the cash market. The FI's net bought 255 crore in the cash market. Just a quick word on the IPO numbers. Tata Tech has seen an overall subscription of close to about 15 times. Gandhar Oil Refinery 2, a little north of 15 times. Flair Writing, 6.1 times. Fedfina, last day today. And so far, about 90% of the issue size has seen a subscription. Back to you.
Thanks a lot for that, Rima. And speaking of IPOs, IREDA, the PSU IPO that ended yesterday, was subscribed 39 times, becoming the 7th most subscribed PSU IPO over the last decade. So we'll keep an eye out for all the 4 IPOs that are closing today. But now over to Abhishek, who's joining in with the stocks to watch out for today. Abhishek, tell us more.
Well, Omas, to begin with, Lupin gets US FDA approval for Bromophenec ophthalmic solution. Go First IBC case, banking sources tell CNBC TV18 that lenders will convene next week to take a call on the way ahead for the airline, while NCLT has granted 90 days extension for Go First resolution. Remember that the key bankers to Go First are Central Bank of India, Bank of Baroda, Deutsche Bank, as well as IDBI Bank. Now, as you mentioned, IREDA IPO gets subscribed 39 times. Remember that the valuations were on the cheaper side, which actually got the street excited. Valuation was about one-time price to book value for a 2% ROA business. Now, sources tell CNBC TV18 that data of 15 lakh users exposed in Taj Hotels data breach is available to buy on Darknet. Now, Indian Hotel spokesperson has responded, saying that the data is of non-sensitive nature. Now, Prestige Estate has launched a residential project in Bangalore. NMDC, they have increased the lump ore prices and fines prices by 200 per ton. So lump ore is now available at 5,400 per ton, while fines price is now 4,660 per ton. Union Bank of India credit rating has been upgraded by ICRA to about AAA from AA, while their outlook has been revised to positive from stable. Sources do tell CNBC TV18 that Apar Industries has launched a QIP with an issue size of about 1,000 crore. Now, indicative price is about 5,264 share. Now, this indicative price is at a discount of 7.5% to yesterday's closing price and 5% discount to SEBI floor price as well. Back to you.
And we keep an eye out on all of these stocks. Abhishek, thanks a lot for joining in. And he was highlighting NMDC, and Nigel was reporting about it yesterday, citing sources that the price hikes that the company has undertaken will take effect from Thursday. And lastly, now we have Manglam Malu joining in with the F&O Qs this morning. Good morning, Manglam. What are the focus is now on the monthly expiry, basically, next week?
Yes, and you guys were speaking about NMDC. Let me tell you that also will be in focus because it comes out of F&O ban. But let's talk about the market itself. Yesterday was weekly options expiry, and it seemed as if someone put a magnet at that 19,800 mark because the Nifty opened higher, thereafter went lower, and irrespective of anything, you know, was meandering around that 19,800 mark itself. And looks like this magnet will be removed only on Tuesday. Why do I say that? Because yesterday we had no global cues coming in from the US. Today there is a shortened session. So if we have any cues, we will react to them only on Tuesday because Monday is a holiday. So up until then, where is the range that we're looking at? The range was defined by the market itself. Yesterday's high of 19,875 and previous trading sessions low of 19,703 would be the broad range that the street would be eyeing. Yes, there was purchase from the FIIs in the cash market yesterday along with the DIIs. However, remember that the FII volumes were on the lower side on a gross basis. And because of this magnet around that 19,800 mark, there have been a lot of long positions which have been unbound. So FI sold around 550 crores in index futures, and in that there was unwinding to the tune of 3,000 contracts, a few shorts added to the tune of around 2,200 contracts as well. What that does is that moves the long short equation to 21% long positions versus 79% short positions as well. And if you look at the index futures composition, it looks like those longs were unbound more in the Nifty bank than the Nifty, because the Nifty bank saw an open interest reduction of almost 5%. It has been underperforming the frontline index itself. So let's talk about the magnet itself then. 19,800 for the next week, which is the monthly options expiry or the monthly futures and contracts expiry. We have the 19,800 call and the 19,800 put, both of them extremely active for a premium of close to around a combined premium of 200 rupees. So you have the 19,800 call with a premium of 130 rupees and you have around 60 rupees available at the 19,800 put. So what does that mean? That the option writers are eyeing a broad range of 19,600 to 20,000. This range was slightly narrow, 19,700 to 19,900 for the last week, but now because it's monthly options expiry, we have the range which has been broadened out as well. The Nifty bank is at an important level. Why? Because supports are nearer than resistances. Supports are, the 20-day moving average and the 200-day moving average. Yesterday we bounced off the 20-day moving average itself. On the way up, 44,000 is a mark that we will be keeping an eye out on. Let's talk about stocks. Stocks that have come out of F&O ban are HPCL and entered F&O ban are HPCL and Balrampur Chini. There was a lot of up move in HPCL that we saw in the last few trading sessions, and out of ban are BHEL and NMDCs, both these public sector units rather.
Interestingly, HPCL is not a stock that we see in the F&O ban pretty often, so we'll keep an eye out for that today. Thanks, Mangalam, for all of these updates. But he's made a very valid point that 19,800, someone has put a magnet there, but we'd hope that the magnet is removed from that level and put at a higher level sooner or later. But time for a short break here on Power Breakfast. Up next, we'll get you cues. We'll be right back. Stay tuned.